All right, folks, there is something really important we need to disclose because this is a pattern tending to repeat itself based on what happened last year. Not first quarter, but majorly second quarter and third quarter. And I want to talk about this because this is really important, all right? And we have all the clues around us to actually seeing what may happen in the next coming short, near future. All right. So we all know that bunch of institutional are buying more shares of AMC. Not the shares that already was displayed or disclosed, as so many might be confused with. But personally, I think this is a new information because it's a new filing. If you jump on Fintel, you will see that Renaissance Technologies reported as of February 11. As of February 11, you can see here, disclosing 2.5 million shares of AMC at a value of $95 million. $95.4 million. This represents a change in shares of 86.7%. 86%. Let's just say 87. Why will a firm with a reputation of being one of the most advanced, smart, algorithm, AI, technology, quant, data-based firm out there? I mean, Renaissance Technologies is one of the, the top of the notch. These guys are supposed to be, the top of the notch. The la crème of the la crème, like they say in French, la crème de la crème. These guys are supposed to be not playing with money. So when they go, not all in, but they pretty much, this is just doubling down. This is close to doubling your position on AMC. Well, somebody will tell me, well, AC, but what about lending? Yeah, well, you don't understand, man. Because the money that these companies are getting out of the lending fees is literally peanuts. It's nothing compared to how much more they can make while getting position to what is coming for AMC. So, is this a coincidence that all of these companies, and you can see here from MarketBeat, look, Gayot Capital Management upgraded to 4.9%, ownership $250 million almost, all right? And then if you go Citigroup, 63% increase in share. Look, lately, all of these green, even TD, upped his position to 77%, all right? We have the Teacher Retirement System of Texas up to 26%. What you don't get with such buyers, this is not just a trading company. We're talking here about a retirement system, and it's not the only one. We have California Retirement Teachers System. We also have, I think, which was Oregon, all right? Oregon that also bought a lot. Look, here we are. California Public Employees Retirement System. These companies are not just playing around with money. No, these companies, when they buy because they're looking for value. And value is, I want my money to start growing. I want my money to give birth to baby money that also can give birth to baby money. And that's how I can have my money work for me while I sleep. And that's how you became slowly and gradually rich. Look, First Horizon Advisors, 940%. Even though the size of the position is not that big, well, it means we know what we're doing with this money because you don't increase this much after being here last quarter. And what is actually really, really, really interesting, and when you go back to the last quarters, all right? This was the second quarter of last year. Anytime we have these suits, the institutions buying and loading up on shares, we had a significant jump on the share price. Look, that happened back in June. It happened again in quarter three. Closer to quarter three, it went all the way from $29 a share to gaining 73% at 51 anytime. So is that maybe also what is behind AMC being up almost 22% in these last 5 days? Potentially, all right? So what is really the thing to understand here, and the bottom line is this current market where inflation and noise of wars between Russia and Ukraine, it doesn't fit a usual market where it was easy to make as much money as last year and the year before, especially if you have this much money to manage on your books for your clients, because competition is going to be hard, it's going to be tough. So in this current inflationary environment, what do the smart money does? They're looking for what we call value. They're looking for companies, for stocks that are cheap, not in the sense that they are not expensive, but on top of not being expensive compared to the potential of the upside money to be made. It's a no-brainer. And AMC, even outside of the short quiz, is one of those, because the fundamentals of the company, the future of the company, it's almost got better, and it's going to be even more. We're going to have more clarity on that when earnings are disclosed in a couple of weeks. So bottom line is, when the Fed is actually not really knowing what they have to do between crashing the market and increasing interest rate in order to fight inflation, everybody is looking for something to hedge the money. But AMC is one of the best hedge out there, because not only there is a short squeeze at play, because necessarily and precisely of what this Fed is doing. So it's all due, man. It's all due. All right. So it may not happen exactly when we want it to happen, but it doesn't mean it's not coming. And when it comes, it's going to be big. It's going to be really big. So be ready, folks. All right.